All right, today we're going to talk about a massive home loan mistake. It's one that could seriously cost you, and it's hiding in plain sight. So let's get right into it. Look, if you live in Singapore, you know the drill. Property isn't just a place to live, right? It's pretty much a national sport, a sign of making it, and for almost everyone, the single biggest investment they'll ever make.
And whenever we talk property, it's always the same stuff, isn't it? We debate the PSF, chase those new launch discounts, argue about freehold versus leasehold. We get totally caught up in all these details, thinking that's where the real wins and losses are.
But what if the costliest mistake you could possibly make has absolutely nothing to do with any of that?
That's it. The real danger isn't the property, it's the loan. It's that seemingly smart, simple decision to stretch your borrowing by, say, an extra $300,000 just because the bank offered it. And that one move can change your entire financial life. Okay, let's kick things off with the heart of the issue, this huge gap between what a bank says you can borrow and what you can actually afford. They are not the same thing. And here's the disconnect, plain and simple. The bank looks at a clean formula, your gross salary, your TDSR limit, it's all just numbers on a spreadsheet. But then there's your real life. Your life runs on your take-home pay, what's left after CPF, and it has to cover everything the bank's calculator doesn't see. Childcare, helping your parents, car payments, you name it. The bank's number doesn't have to live your life, but you do. And this quote just hits the nail on the head. You hear that bigger number, an extra $300K, and you immediately think, wow, bigger unit, better location, this is my chance. But what it really is for so many people is a trap that locks you into a much riskier financial future. All right, now for the part that might be a little painful, let's get into the hard lungers, because this is where the true cost of that free upgrade becomes unbelievably clear. So what are we really talking about here? What's the final bill for borrowing that extra $300,000? I can tell you right now, it's not $300,000, not even close. By the time you factor in interest over a 25-year loan, that extra $300K you borrowed will end up costing you almost $500,000 out of your own pocket. That's $170,000 in interest payments alone, money that's just gone.
Poof.
And as shocking as that number is, that isn't even the worst part. No, the real cost is something else entirely. It's hidden. The true cost is the opportunity. It's all the wealth you could have been building, but couldn't, because every month, a chunk of your money was just being sent off to service that bigger, unnecessary debt. Just think about it for a second. That extra mortgage payment, maybe around $1,500 a month, what if you had invested that money instead? Over those same 25 years, even with a pretty modest return, it could have grown to over $900,000. That is the devastating cost of this mistake. It's not just the interest you pay the bank, it's the fortune you don't get to build for yourself. So if the math is this brutal, why on earth do so many smart people walk right into this trap? Well, it all comes down to psychology. There are a few mental shortcuts and social pressures that are incredibly hard to resist. Yeah, we tell ourselves things like, oh, it's only $1,000 more per month. We fool ourselves into thinking a more expensive house means we're wealthier. We get comfortable with low interest rates and assume they'll never go up. We totally ignore the long-term damage to our CPF. And of course, there's good old FOMO, the fear of missing out when we see friends buying bigger places. These psychological traps are incredibly powerful. And this comparison is so important. Look at buyer A with a $2 million property. On the surface, they look like they're crushing it, but they are leveraged to the hilt. If the market turns, their net worth could get wiped out fast. Buyer B, with a smaller property and smaller loan, is actually in a much stronger, more resilient financial position. Real asset progression isn't about the price of your asset, it's about the growth of your net worth. And we have got to talk about the CPF blind spot. Taking that bigger loan sets off a dangerous chain reaction. You use more of your CPF ordinary account to service it. That means the accrued interest you eventually have to pay back to yourself gets bigger. And the scariest part? All that money is no longer sitting in your CPF, earning that risk-free compound interest for your retirement. It's a silent killer of your future wealth. Okay, so what do we do? How do we avoid this trap? The answer isn't to not buy property. It's to fundamentally change our mindset. We need to stop thinking about borrowing the maximum amount and start thinking about borrowing the optimal amount. This right here is the new rule of the game. Seriously.
In the property market ahead, the people who really come out on top won't be the ones with the biggest loans. They'll be the ones who borrowed strategically, leaving themselves room to breathe, invest, and actually build real wealth.
So, before you even think about signing for that bigger loan, you need to run this 5-point stress test. Ask yourself these tough questions. Can you survive on one salary? What if interest rates shoot up to 5%? Is this loan preventing you from investing? And finally, the big one. Is this purchase actually making you wealthier, or is it just making your life more expensive? If the answers to these questions make you nervous, you have your answer.
Let this one sink in for a minute. We focus so much on the property, the address, the floor plan, the amenities. That's where you'll live. But it's the loan, the size of it, the monthly payments. That is what will determine how you live for the next 2 or 3 decades. It dictates your freedom, your choices, your stress levels. So at the end of the day, remember this. True financial power isn't about grabbing every dollar the bank is willing to lend you. Sometimes the smartest, wealthiest, and most powerful move you can possibly make is to look at that bigger loan offer and just say no thanks.